This is Bloomberg Businessweek with Carol Massar and Tim Stenovec on Bloomberg Radio.
Well, yesterday, NASA gave the summer of 2023 an ominous distinction. Hottest on record. Months of June, July, and August were about 0.4 degrees Fahrenheit hotter than any other summer since the agency started tracking them back in 1880. And while you may not have noticed it if you were sitting in air conditioning, farmers in Africa are certainly seeing the impact of climate change firsthand. So we have here Alloysius Attah. He's the CEO of Farmerline. His company is using AI to help farmers try and predict crop yields, fertilizer demand, and just more broadly adjust to the impacts of the changing climate, as well as getting money to fund their businesses. So before we go into climate change discussion, Alloysius, just tell us, what does Farmerline do and make available to farmers to help them farm better?
Thank you for having me here. Farmerline does three things. We leverage digital tools to make sure farmers get access to information that actually helps them to grow their food well. We help them to access financing that helps them to get access to high quality fertilizer and seeds. And then we help them to also sell their crops locally and also to export so they can make money to support their families.
And which farmers do you work with?
So mostly small-scale farmers that have about 2 to 4 acres of farmland, and they grow mostly corn, rice, maize, cocoa, cashew, soybean.
And where exactly? The locations?
West Africa, East Africa. Like we cover, many parts of the continent. We've actually supported 1.7 million farmers across 48 countries.
So, I was talking about the climate impact there. Yeah. What are the farmers that you talk to seeing? How is this impacting them to have just a warmer climate overall?
Well, a warmer climate is actually leading to, decreasing yield for farmers. Decreasing yield because of the rains. The rains are actually stopping. The soil moisture is also reducing. All these factors actually come together to reduce yield. Luckily, the technologies that farmers need to actually to succeed and adapt to the changing climate has already been invented. Stuff like high quality seeds were invented over 100 years ago. Organic fertilizer that is also good for the soil is also invented a very long time ago. All we need to do is to make sure that the education is there for the farmers, and all the tools and services that actually has been invented is actually available and affordable, so these farmers can actually take it. Why this is very important now is that if you had coffee today, if you had chocolate today, there's a very high chance that small-scale farmers in West Africa and East Africa actually contributed to that chocolate and also that coffee, right? So it's more about, it's not just about supporting farmers in Africa, but it's about how do we create a food secure future, and how do we also take care of the planet while doing that.
You brought up tools. What are those tools?
So tools like mobile technology that actually helps them to access information. So we have something called the 911 for farmers. So farmers are able to call a helpline and get access to information in their native language. Products like organic fertilizer, cook stoves, drought-resistant seeds. All these things actually help farmers to also increase their yield, but then also protect the soil and the environment at the same time.
Okay, so that sounds like pretty basic stuff. Cool that they can call a helpline, but basic stuff. Where does the AI component come into this?
The AI is about accelerating financing to them. For every $12 that the world spends on climate mitigation, only $1 actually goes to climate adaptation. There are people who are, irreversibly, affected by the impact of climate change. So we need to help them to adapt and also be resilient. We use the AI to leverage agriculture data that actually helps us to create, an economic profile about the farmer. So you can think of it like a FICO score, a credit scoring system that allows us to use alternative data to finance farmers to get access to high quality fertilizer and seeds assets, but then also access to market. The AI helps us to predict a farmer's likelihood to default and also repay a loan, and that allows us to actually finance them.
What are climate smart investments when it comes to agriculture?
Climate smart investments, investment in even in learning about the weather. You and I, when we get access to the phone, we can tell when it's going to rain. We can tell the weather. If you are a farmer and you are living in rural Africa with no internet access, it's actually very difficult for you to tell the weather. So getting weather information to farmers in their native languages. Native is very important because all the information that is really available is in English and most Western languages. There are about 50 languages in Ghana, 200 languages in Nigeria. So it's very important to take all this content and make it available in audio in languages that farmers can understand, so they can actually use it. So, weather forecast is one. Drought-resistant seeds. When a rain stops, farmers need a seed that is still going to survive and grow and produce food that we need. Organic fertilizer. Organic fertilizer increases, in the micronutrients in the soil. So farmers are able to still get yield, but then also protect soil, protect soil, at the same time. So these are some of the tools and, technologies that are really available. And if we educate, we finance, we can help farmers to actually afford and use it.
Who's the financing coming from at this point? Because I feel like we, you constantly hear about microfinancing projects, et cetera, and a lot of them don't end up panning out that well for people. But who's supporting this at this point? So
far, some of our investors are Acumen. It's an organization based in the here in New York. FMO, Dutch Development Bank, Oiko Credit, RippleWorks based in Silicon Valley. So these are all some of the impact investors that have come together to actually invest in our company to help us support more farmers. We've put in about $12 million of our own money this year, and going forward we hope to raise more so that we can support a lot more farmers.
Yeah, so can you tell me why some of the other, I guess, microfinancing projects out there haven't worked out, and why you guys are different?
Well, I think in agriculture, financing is very different. So you need to actually know about the risk, and you need to actually design for that risk. You can't just throw money at it. You have to finance. When you finance, you have to come up with services that actually de-risk. So let me just put it very plainly. If you finance fertilizer, you need to actually train a farmer on how to use that fertilizer very well. And then when they grow their crops, you need to actually help them to sell so they can make their money and pay back the financing that they've taken from the microfinance institutions. If you just finance a farmer in isolation without all the support services, the risk of default is very high. And I would imagine that's why most of the microfinance institutions may struggle when they don't offer services to de-risk and help the farmers.
I will say I used to cover commodity hedge funds, and the number that went bust was huge, and that's hedge funds with somebody sitting in New York. So I can understand why, as a commodity play, you have to be a little bit more complex.
Break down the size and scope when you are talking about potential defaults there.
Defaults could go up to like 20-30% if farmers are not supported. If you just give money to a person with less training and no access to market, there's a very high chance that they could actually divert, the capital to do something else. I've actually had a story once. I went to the field, I saw a farmer, they bought a fertilizer, and because they didn't know how to use it, they kept it for another year. So even though they invested in it, they actually didn't get the return that they wanted. If that farmer were to take a loan from a bank, there's a very high chance that farmer has actually defaulted already. So it's quite key to provide support services to de-risk the opportunity, help the farmers to succeed, and when they succeed, they can pay you back for your investment.
Do you have a sense of how many have potentially defaulted?
In general cases, if farmers are not supported, default can go as high as 30% in a portfolio.
Talk to me a little bit about the macro issues facing some of the farmers right now. I know fertilizer was such an important one after the beginning of Russia's invasion of Ukraine. Yeah. Has that stabilized? Are there other issues that are sort of top of mind? What are the farmers complaining most about at this point?
Yeah, that's a great question. Africa is a net importer of fertilizer. So we all bring our fertilizer from Russia and Ukraine. When the war started, the price of fertilizer actually tripled. What actually happened is that if a farmer has about 4 acres of farmland, they can only afford fertilizer for just 20% of that land, which means that they'll cultivate less food. And if they cultivate less food, there will be less food and there'll be higher prices.
Right. We saw the prices of food go through the roof. I think we hit a record at one point on the UN World Food Index or something.
Exactly. Also if the cost of financing goes up, price of food also goes up as well. If the price of petrol goes up, price of food goes up as well. Because, just an example, it cost us in Ghana $1 to move 1 bag of fertilizer from the south of Ghana to the north of Ghana in 2021. In 2022, that has doubled to $2.
Does that come back? Has that come back? Is it better now?
Oh, it doesn't. It stabilizes, but it never goes back.
Okay.
So less and less fertilizer is being used. So for instance, African farmers are using about 8 kilograms per hectare. While compared to American farmers that are using 120 kilograms per hectare. Now that 8 kilograms has actually reduced further to 4. So less and less farmers are using fertilizer, which means less yield, which means higher food prices and fewer food.
Whenever you're speaking with farmers, and we only have about a minute left, but what are some of their main concerns sort of moving forward from this and how this could potentially also help them?
Farmers just want access. They want affordability. They want access to cutting edge technology that actually helps them to produce more food and also grow food well. So all they ask for is that if fertilizer has been invented like 100 years ago, they need access. So which means that if you are in a rural Africa, a place without with bad roads and poor internet, you want to be able to access it. You want to be able to access the solar pump. You also want it to be affordable. You want financing schemes that make it more affordable. So even if you don't have the cash flow up front, you can still use it and invest in your farm. All farmers have one dream. They want to grow more food, they want to feed the future, and they want to make money doing it.
It's a big dream. It's great.
Yeah.
Aloysius, thank you so much for joining us here in studio. That's Alloysius Attah. He's the CEO of Farmerline. And, it just, I think, brings close to mind for us sitting here in the Interactive Broker studio in New York, how much technology can influence even these small things on the margins and really change not just the future health of, a specific family, but also food security more broadly.